you've got Hote that came out and said that he is working with Fannie Mae and Freddie Mac so that way their businesses can count cryptocurrency as an asset for the mortgage. So This is a really big step, Mike.
Yeah, it's big.
You just got back from Permissionless, one of the biggest conferences in North America. Give us some juicy inside gossip. What's happening in crypto?
Kind of the stuff that we talk about, like stablecoins was a talk of the day. A lot of, talk to a lot of builders, and, they're certainly building around stablecoins, emerging markets, apps for emerging market users with stablecoins powering them. So, that was obviously a hot topic. And talk to a bunch of people in and around the whole crypto treasury trend. And I was just kind of giving my thoughts on that, and asking questions, because I think these crypto treasury companies are getting very creative. They're popping up everywhere, and it's trying to get into the minds of some of those operators and seeing like how they are, what kind of like financial instruments they're looking into, outside of the kind of the typical equity sales. Talked about some of the crypto assets outside of Bitcoin that are being scooped up for treasuries, and it's going down deeper into the rabbit hole for those. So that was certainly a super hot topic coming out of Permissionless as well.
We covered some of those treasuries last time. We talked about Tron, we talked about Ethereum. So there are more, and we'll cover some that have other altcoins as well. But before we get to that, I need to do some inside work just to make sure that you weren't lying to me, Mike. I needed to make sure that you were actually at Permissionless. And lo and behold, this video popped up. Who's this guy here? I guess you were actually there. You weren't lying to me. So you really were. It looks like you're really deep into a conversation with some of the crypto bros covering treasuries. So I thought you might find that funny. But
I was there.
On a more serious note, Mike, I mean, Joseph Lubin, he talks about this as well. He stated that things could get really ugly with these companies, but it's if they do not manage risk. And so when you look at these companies that are putting Bitcoin on their balance sheet versus companies that are putting Tron on their balance sheet or Solana, I mean, do you have more faith in those that are putting Bitcoin than some of these altcoins? What are your thoughts on that?
Joe Lubin's kind of the pot calling the kettle black, right? Like, he's the one who's leading the spin up of the company Sharplink Gaming of the Ethereum treasury company. But like I think I get. I didn't read that article. I didn't see what he said. But like I think I get what he's saying in the sense that it was just maybe in line with what we said about more of like the vehicles becoming more and more confusing and complex. And maybe that's where he's coming from, which I agree with. Again, you've got all these, you've got companies taking on a lot of debt. You've got these, and just very, you got companies doing pipes and just creating these more complex financial instruments to raise these monies with these funds to buy crypto and put them on its balance sheet. Maybe that's what he's talking about, and I would agree with him. I mean, overall, it's risky, and overall, it feels very, very frothy and very, it seems like there's a bubble here. But yeah, if you had to choose one asset to go with, obviously Bitcoin is the most obvious one, but there's certainly still risks inherent in that.
I think there's a difference between somebody like, for instance, like Anthony Pompliano just announced that he's creating ProCap Financial, Backed, which is the publicly traded company. They are raising up to $1 billion, right? And the list goes on. You've got MetaPlanet now as well. So a lot of these companies are following MicroStrategy. But then you also have, which you brought to my attention, a company called Nano Labs that's putting BNB on their balance sheet. And then other companies are putting Hype on their balance sheet. I mean, I think there's a difference here. To your point, it does feel a little bit frothy.
I mean, there's a couple of levels to it, right? These companies are taking more risk put on their balance sheet, but also it's like they're just seeing that their stock price to NAV. I think like strategy is almost 2-to-1, trading above the asset value of just pure Bitcoin. They see that as just there's obviously market interest in paying more for the actual stock than the actual underlying asset that they're holding. So and I think the people who are buying that that stock are it's just a trade for them. It's they don't I don't know how much they believe in actual MicroStrategy. It's strange, man. It's strange.
It's like a TradFi degen. Is basically what it is. It's like a new group of investors, and these are the TradFi degens that understand maybe a little bit more than a typical crypto investor on how these things work.
Yeah, I mean, I think you're seeing a very a parallel with Circle as well, like Circle's valuation. I think it's just like it's kind of like momentum trading, where it's okay. I need exposure to crypto some way, and I need exposure to stablecoins in some way. Like those are obviously stablecoins part of crypto, but like a very hot narrative, right? And I don't really want to buy crypto. I don't really want to spin up a wallet or go on a centralized exchange to buy crypto. So I'm just gonna use the tools that I have, the trading tools that I have to scoop up who is right now the poster child representing the crypto industry and the stablecoin industry, Circle. And even though it is and look, you can see how to value it is like, okay, are you looking at there's a couple ways to do it. Okay, you can look at the actual numbers and the business model and see like, Circle is so dependent on Coinbase for distribution. They're trading at a ridiculous revenue multiple that is like stratospheric. All of these kind of like typical Wall Street valuation metrics are terrible for Circle, right? And absolutely do not justify how much it's worth on the market. Or are you looking at it kind of like a venture investor saying the growth of this market is going to be so enormous and Circle is going to play this very important role in there, in this massive market. So, it depends on how you want to look at it, right? But you're right. I mean, I think people there is a subset of people that are just aping into this stock because they just want exposure to a very hot market.
No doubt about it. The institutional adoption, it's here. We're seeing it right before our eyes. And part of that adoption trickles into real estate as well. So you've got Pote that came out and said that he is, trying to work on Trump's vision and working with great Fannie Mae and Freddie Mac so that way their businesses can count cryptocurrency as an asset for the mortgage. So for those that are watching, never purchased a house, obviously if you're going to be applying for a mortgage, one of the first things you have to do is talk about, okay, what's your income? They have to know your credit score, of course, and then all of your assets. And traditionally, if you have assets in your Fidelity or any other portfolio on the investment side, traditional investment side, you can count that. But you couldn't count crypto. You couldn't count your Coinbase. And so that was a really big knock on anybody that was investing in crypto, and they couldn't get a mortgage. And now with real estate being very difficult for most homeowners to actually purchase, this is a really big step, Mike.
Yeah, it's big. So Bill Pulte, he's the director of Federal Housing Finance Agency, and like you mentioned, he ordered Fannie Mae and Freddie Mac to prepare proposals and be ready to discuss counting crypto as an asset in mortgage assessments. So now a few months ago, I bought a house. I moved up here to New Jersey. And, I asked our lender if they would consider crypto holdings as part of the assessment? And they said no. But so this is a great a great development. There is a hitch to it where it's only crypto stored on a U.S. regulated centralized exchange. So you're looking at the Coinbases, the Krakens of the world. So like in that sense, like I didn't have any of my crypto on a centralized exchange. So I guess I would have had to move it there and then move it out. I'm not really sure how that those details would work out, but there are restrictions there. But still, I think this is a big step forward, because I think like I think we're just the citizens, the people who are looking for houses, the ones that are like having trouble buying houses because they've kind of grew up and worked in this era of high inflation, high rates, are the ones that are like the Gen Zs. They're the ones that the young people who are really adopting cryptocurrencies. Helping them, they've had big issues buying houses because we've been in this tough macro environment. Having them to be able to use their crypto holdings to potentially get a loan, I think it's a big deal.
On the flip side of that, just because me, I always like to play devil's advocate. It does mean that if you were holding your crypto silently, you can't really do that anymore, right? Because if you have it on a cold storage and you're not KYC'd, and then all of a sudden you transfer it over to your Coinbase and you had it there for a week, I don't know if the mortgage company is going to be like, oh yeah, we'll count that. You know what I mean? Something tells me it has to be either purchased on Coinbase directly and kept there, or they're going to have to figure out, okay, where did you just send this 300,000 from? It's like, oh yeah, well, I have a cold storage wallet. So for anybody that's been kind of on the down low, obviously you can't do that. So there's for those individuals, it's not all sunshine and rainbows, but nonetheless, I think it's great for people to have options. And
or you can like have your buddy who's got a ton of crypto, maybe just like send it to your account and you send it back. That's so kind of pretending that it's your crypto. Yeah, there's a lot of things to consider here, but I think just moving towards that direction in these early stages is super positive.
Absolutely. Mike, walk me through this story, because this touches on security, which obviously is within my line of work, and in terms of like governance security, but also a little bit of drama with other protocols. So walk me through, what exactly does this drama entail?
A little bit of the bridge wars going on here. So across protocol, which actually we talked about in the past, they raised a pretty big round a couple of months ago. So their founders are accused of manipulating DAO votes to transfer 23 million in their native token ACX from the DAO Treasury to their affiliated company Risk Labs, supposedly using insider-controlled wallets to ensure proposals passed quorum. So they identified like the founders, key team members like Hart Lambert and Kevin Chan, kind of like covertly approved the proposals with some wallets linked directly to them that accounted for significant voting power. So Hart Lambert denies any wrongdoing, just claimed that all votes were public. Team members used tokens they personally acquired. But there's a lot of doubt around, and there's tons of doubt around this, right? Like there's so many issues with DAO voting. You talked about, there's some examples with, VCs who, were early investors that, own a lot of tokens and then come in and kind of control the vote. You're talking about, pseudonymous wallets with large amounts of tokens, kind of coming in and changing the vote. So to pile on top of that, LayerZero founder Brian Pellegrino on Twitter accused Lambert of insider trading. Essentially, he showed a couple of tweets from back in December 2024 that showed Hart Lambert of across buying tokens with his personal .eth address shortly before Binance listed ACX. And Lambert denied the allegation. He said he had no advanced knowledge of the listing because it was not a paid listing, like many times projects will be in negotiation with Binance for a paid listing. He said he found out on Twitter like everyone else. And he bought them with his own .eth address. So it's like, yeah, I don't think he was really hiding anything. So anyway, kind of the facts, you've got a couple of sides of the argument, but it shows a little bit of kind of the cracks and the problems of one, DAO voting and DAO governance, and of course like how centralized listings, especially on something a centralized exchange as powerful as Binance, how that is sometimes a big that's obviously a very big event in the life of a protocol, and some of the kind of potential shenanigans that could happen around that, knowing that when if you're involved in those discussions, there's certainly the potential for insider trading.
It's tough to be a builder because on one hand,
no kidding.
you've got, so whenever you have smart contracts, and I can speak to this from experience because, I work at CertIC. I lead the North American business development team. So every day I talk to our engineers and I talk to our clients, and like centralization becomes a big risk, and ways to reduce that risk is to renounce your privileges to a DAO. But then on the other side, right, you've got these risks with a DAO. And so this is more for the builders. I wanted to kind of run through a quick list of things that you can do to kind of help prevent governance risk, but you can set high quorum and participation thresholds. You can implement time delays. So these would be like time locks before enacting proposals. Of course, use a multi-signature wallet like Gnosis Safe, or Guardian contracts to stop or veto suspicious proposals. Of course, you can monitor accumulation and voting activity. So there's a few things that you can do, and I don't know enough about the story to 100% say that, oh, well, clearly they didn't do these things in this particular case. But I do know that there are some nuances when it comes to governance contracts. So with that said, if anybody's like overwhelmed by this process and they are a builder, feel free to contact me. I'm sure I can get you in touch with somebody that can give you a good advice.
And a lot of those solutions come with its own problems, right? Like if you have high quorum, you gotta like herd the cats, right? To like get enough people to be involved in the vote, and to push things through, right? And sometimes you've done a ton of work on these proposals, months and months and months of work, discussions back and forth, and then you don't get quorum, right? And then it's like DAO. I think DAOs are these kind of theoretically beautiful entities that that are really only facilitated by crypto, and we think that, but they just operate so slowly, like painstakingly slowly, that it's still very early in this kind of business model, but like it's certainly worked better in some situations than others, but it is a difficult model to execute. But we'll get there. We'll get there. I believe we'll get there.
And that's why for my community network spotlight, when I talk to people about potentially creating a DAO out of it, they say, well, it's not that simple. Like DAOs are very complicated, and you're seeing it firsthand here with this story. Next, Mike, let's talk about 3 projects that have recently completed a raise. And this is a very good way for us to tell where is the industry headed? What is the technology that we should be on the lookout for? And today we're going to cover privacy. We're going to cover prediction markets and also DeFi. So these are very interesting projects. Let's start with Kalshi.
So Kalshi is a prediction market. They raised $185 million in a Series C round, led by Paradigm with participation from Multicoin, Sequoia Capital, Neo, and Bond Capital. So Kalshi, they are a federally regulated prediction market, right? They allow users to trade on outcomes of events, politics, sports, economics. So I think with the darling of our crypto industry back in October, November was Polymarket, right? Polymarket really drove so much interest in, you could see it a couple of ways, right? Polymarket drove interest in the election, and election drove interest in Polymarket, right? And this is what makes this deal so interesting, because Polymarket is also raising a round right now. I think they are raising, I think, $200 million at like a $1 billion valuation. So it's curious to see crypto VCs like Paradigm and Multicoin fund Kalshi, right? And I don't know, maybe I can't imagine they can't get into the Poly market. These are the 2 biggest names in crypto VCs. But like, Kalshi does not run on blockchain rails like Polymarket runs on Polygon. I think maybe Kalshi, I may be wrong here, but like, they're not crypto native like Polymarket is. And maybe they're going to accept crypto somehow for their bets. But like Polymarket was, crypto's darling, during the election season. So I think the biggest difference is that Polymarket is not yet regulated in the US, while Kalshi is. So I think that is what I find most interesting about this, where you're seeing crypto-focused VC funds fund a non-crypto native prediction market, as opposed to the crypto native one that is raising money at the same time.
Interesting. So it sounds like Polymarket is outside the US trying to tap into the US market. And you've got venture capitalists that are saying, okay, let me go inside the US market and figure out a way to work outwards. Perhaps maybe they are going to have eventually build out some kind of, blockchain rails in order to run this. And they'll just be competing against each other. Because I was about to ask you, how is this any different from Polymarket? Right. But it sounds like they already have a US presence.
Right. But also Polymarket just announced a partnership with Twitter. Right. Right. So like that's super intriguing. And you got to imagine that they're in board, Polymarket are talking to, I believe it's the CFTC that is regulating them. It could be wrong there, but you got to imagine something like that is coming, them being regulated in the US. So yeah, I think that's the most intriguing part of this fundraise. The fact that these crypto native VCs are funding Kalshi, not Polymarket.
Next, let's talk about Canton Network, the only public blockchain with privacy that works. Mike, you brought to me a lot of different privacy projects. I get the sense that privacy is also very important to you because you understand how important it is to people in crypto. What really stands out to you about Canton Network?
All right, there's a couple of things that make this interesting as well. So yes, Canton is a privacy-enabled institutional L1. We've raised $135 million from very institutional people. DRW, TradeWeb, BNB Paribas, Citadel, Goldman Sachs, and many others. Essentially, Canton is this privacy-focused blockchain designed to connect traditional and decentralized financial systems, allowing institutions to kind of securely exchange between real world assets between their two worlds. And what's interesting here is I think it's towing the line between a permissioned blockchain and an open blockchain or a permissionless blockchain, like Ethereum, Solana, like all the ones that we are very familiar with. Permissioned blockchains, they've had many swings at the bat, at the plate. We had like R3 Corda and a Hyperledger, and I just don't. They just really haven't had much traction. And as someone to the crypto native folk, it kind of defeats the purpose of having a blockchain, right? If you've got just a small amount of entities that are the ones who are determining consensus and essentially controlling the blockchain, like what's the point of blockchain, right? But Canton seems to be kind of bucking that trend, and it seems like they are obviously, at least on the fundraising side, very successful, raising funds from these big banks. So my question is like, all right, one, is Canton, is it truly a permission chain? Like where are they on that spectrum? And two, are permission chains potentially going to make a comeback now that we have a lot more institutional interest in our space?
Mike, is it me? Maybe I'm missing something here, but this seems to be like a pretty big deal. Today, NASDAQ announced it has successfully facilitated end-to-end margin and collateral workflows on Canton Network in collaboration with QCP Group, Primrose Capital Management, and Digital Asset Com. I mean, it seems like a pretty big deal, right?
They've got all the huge financial institutions either what looks like either investing in them or potentially using them. So yeah, I mean, maybe that's maybe now's the time, right? Maybe now's the time for permission blockchains to come back. Or again, I haven't dug into exactly how Canton works, but maybe they're a little bit further along the lines on that spectrum in between permission and permissionless. It could be a little bit of both.
Yeah, another story to watch out for. Next, Mike. Last but not least, let's talk about Vera.
Vera is a DeFi infrastructure company. They raised $18 million in a round led by Coin Fund with participation from Coinbase Ventures, Maelstrom, and many others. And they provide a modular vault framework, allows developers and institutions to create smart contracts for managing yield strategies without exposing users to all the complexities and bad UX of DeFi. And they've got a ton of traction. They've got over 100,000 users, more than 3.7 billion in TVL, and they've got big partnerships coming soon. We've got a lot of talk of like this bucket of like infrastructure. Like infrastructure, we need more consumer apps, no more infrastructure. We don't need more infrastructure. I think what that comes from is just more of like general L1 and L2 infrastructure. Again, there's just a lot of debate on like whether we need new L1s and L2s, and I think most people will say we don't. Others, I'm actually in the camp of that. Yes, there are still optimizations that can be made. I don't think we're done innovating around the core infrastructure. We're not necessarily investing in those, but I still think that like there's still some tweaks and optimization that can be made. But I think all this other quote unquote infrastructure is like being pushed to the side, like this DeFi infrastructure, like cross-chain infrastructure, account abstraction and chain abstraction infrastructure that I think we're still in the pretty early stages of that, because all those things need to be built, right? And they may not be the fundamental low-level L1, L2 that are running apps directly on top of it. You got to build on top of it, but like they are maybe the infrastructure that's connecting these L1s or L2s, or abstracting these L1s, L2s away from the end user. So I think, yes, we need more consumer apps, but I still believe that the infra to power those consumer apps and make them easier to use and open up different features that have never been available before, and make those features more easily implementable into those consumer products we're still very early.
Still early, job's not done, many things to improve. And on that note, Mike, this was a great episode. We talked about Bitcoin treasuries, altcoin treasuries, and as always, ending with some cutting edge technology stuff. Gets me really excited. We're already in the second half of 2025.
I know, it's crazy.
It is. It's very crazy. And, you know, if the history says anything, this will be the craziest next few months. That remains to be seen. But
yeah,
one thing's for sure, we'll keep educating. We'll keep talking about the big news. And for those that are watching, if you found this video helpful, subscribe to the channel, like the video, give us a comment, follow Mike on X, and check out networkspotlight.io and join our Web3 Founders community. Bye, everyone.
See you, everyone.